Buy the dip. Should I buy the dip? Is everyone buying the dip? Should we be buying the dip? I'll spare you the crappy joke, but chips. We're going to talk about buying the dip and what it means when it comes to investing your money. What does it mean to buy the dip? Well, according to not Wikipedia, Investopedia, even better. Buy the dip means purchasing an asset after it has dropped in price. The belief here is that the new lower price represents a bargain, as the dip is only a short-term blip and the asset with time is likely to bounce back and increase in value. What does this mean in real words, in real terms? So let's just say you buy a Facebook stock or Square or Twitter or Enbridge or any company. It's not always just going up, right? My charts are terrible, just like my writing. So in the perfect world, you think a stock would go up like this, but it doesn't. As you can see, it goes up, it goes down, it goes up again. And sometimes this happens due to no fault of the actual stock, right? So it could just be the market, it could be inflation, it could be a pandemic, as you know, we've had a never-ending pandemic right now, right? For example, when they announced the new Omicron variant, everything went down. So buy the dip means when everything goes down, instead of panicking, a lot of people will panic sell. So the reason a lot of investors, and this applies to stocks and crypto, the reason they lose money is because when something's going down, they panic and they sell. So they made a body here, then they sell here and they get out and they sold and they lost money. It's this terrible strategy, but it's just life, right? People get nervous, they panic, they sell, they lose their money. I don't want that to happen to you. So buying a dip is when just say the stock goes down, or the crypto goes down due to no fault of its own. It's just down because of the market. You buy, right? So your goal is to buy there, and then hopefully it goes up. Don't mind my crappy charts. We're getting there. We're getting there. It goes up. So you bought the dip, and now it's bounced back to its original price. Now it's even higher. You made money. So that, in theory, is how you buy the dip. The problem is, of course, you could buy here thinking that's the dip, and what happens is it dips even more. This has happened to me with cryptocurrency a lot. It'll dip even more, so I thought I bought the dip, and then by the time it stabilizes, it's all the way here, and then it starts going back up. My charts are terrible. It starts going back up, then it takes forever to even get back to the price that you bought the dip at. So that's something you have to really keep in mind. So it is a great strategy to buy a dip, but the problem is trying to time the market is very difficult. I would say it's almost impossible. And it's all about time in the market as opposed to timing the market. So, sounded kind of smart there, right? So, if your goal is to buy the dip, that's cool, but just remember that it could go down even more. It could take you a while to make your money back. So what I would do to make this work is this. Simple. Keep cash on hand. So I'm a fan of, I invest a lot of my money, I've become more aggressive with investing, but I also keep some cash on hand, because you never know when you want to invest some money or when something pops up, right? It's always good to have money in a savings account. A little bit, not too much, because... Bella, you want to come join me? So I got a little assistant. Oh, never mind, my assistant ran away. But a savings account pays you 1.4%. It's not much, but it's good to have money ready to go. So for example, if you are thinking about getting into Bitcoin or Ethereum or buying a stock, and you have some money, and you notice there's a correction in the market or something happens, this can be your emergency fund, which is the money you save for when shit hits the fan for 80 days. When there's a dip, when there's a correction, I would put some money in. You might as well take advantage. When stocks and crypto goes on sale, it's very rare. Usually it's because of a variant or because of inflation or some terrible news. So you want to make the most out of a crappy situation. So have some money, take that money from your savings account, buy into this asset. Hopefully, I'll be honest, you're probably going to miss the dip. I've never caught the dip once in my life after investing for 15 years. So you'll miss the dip, but even though you'll test the waters, you'll make this investment that you believe in, and then hopefully it goes back up in value, and you keep on buying. So on top of buying the dip, you can do a lot of dollar cost averaging, so you're just buying every week, every 2 weeks, but that extra money allows you to buy the dip on top of your dollar cost averaging, which allows you to make some money, but just keep in mind that it's almost impossible to time the market. So while buying the dip is fun, you're never going to be perfect with it, but hey, it always helps to make some extra money.